The privacy narrative is making waves again in the crypto space, this time with Dash, surging past $90 and grabbing attention from privacy-focused traders everywhere. If you've missed the action, this veteran coin is proving it's still got serious game. Today, we're unpacking everything about Dash, from its origins and tech to the reasons behind this latest pump, key risks, and some bold price predictions. So, what exactly is Dash? At its core, Dash is a cryptocurrency designed to be digital cash, fast, private, and easy to use for everyday payments. It launched in 2014 as a fork of Litecoin, which itself is a Bitcoin fork, but with big improvements on speed and anonymity. Originally called Xcoin, then Darkcoin, it rebranded to Dash for digital cash to focus on real-world usability. Here's how it functions. Dash runs on a two-tier network. The first tier is miners using proof of work with the X11 hashing algorithm. That's 11 different hashes for better security and efficiency than Bitcoin's SHA-256. They secure the blockchain and add blocks. The second tier is master nodes, special nodes run by users who stake at least 1,000 Dash as collateral. These power killer features like instant send for transactions confirmed in under 2 seconds, and private send, which uses CoinJoin to mix transactions and boost privacy without tracing. If you're trading crypto like Dash or anything else, Weex is your go-to exchange with super low fees, lightning-fast executions, and top-notch security. They've got perpetual futures, spot trading, and even some killer bonuses for new users. Head over to the link in the description below, sign up using my referral, and you could snag up to $30,000 in welcome rewards. Seriously, don't sleep on this. Click that link and level up your trading game today. Dash also has decentralized governance built directly into the protocol. 10% of block rewards go into a treasury, and masternode operators vote on how that funding is used. Rewards are split evenly between miners and masternodes, with the remainder funding the DAO. This creates a self-sustaining system that pays for development, integrations, and growth without relying on a centralized foundation. Dash has a capped supply just under 19 million coins, with roughly 12 million already in circulation, and it's accepted by thousands of merchants worldwide. So why is Dash moving so aggressively right now? Momentum has been strong, volume has exploded, and market cap has pushed back nearly into the billion-dollar range. One of the biggest drivers is renewed interest in privacy-focused assets. As regulation tightens and blockchain analysis becomes more invasive, capital is rotating toward coins that offer optional privacy and censorship resistance. Dash fits that narrative cleanly without being experimental or untested. We're also seeing capital rotate out of other privacy coins that have faced delistings, controversy, or uncertainty. That liquidity doesn't disappear. It flows into the next viable option, and Dash has benefited heavily. At the same time, adoption is improving. Expanded fiat on-ramps, payment integrations, and global merchant access are making Dash easier to buy and easier to spend, which reinforces its original digital cash thesis. Exchange listings have added fuel, increasing liquidity and visibility. Meanwhile, the masternode system creates a flywheel effect. Higher prices encourage more staking, which strengthens governance and treasury funding, which then supports further development and adoption. It's an older network, but one that's suddenly aligned with where the market is heading again. Now let's slow down and talk risks. Dash has moved fast, and sharp moves often come with pullbacks. Profit-taking, overbought conditions, and leverage flushes are all normal after runs like this. Privacy coins also face regulatory risk. Delistings or jurisdictional bans can hit liquidity quickly. And like every altcoin, Dash is still highly correlated to Bitcoin. If BTC pulls back hard, Dash won't be immune. Position sizing, patience, and discipline matter here. Momentum is not the same thing as certainty. Right now, privacy in crypto is going through a weird phase. On the surface, it looks dead. Exchanges are delisting privacy coins, regulators are tightening controls, and most traders are chasing whatever the latest meme or AI narrative is. But underneath that noise, something very different is happening. Both from the price action we clearly see as these coins outperform one after the other, and under the hood. As more users realize how transparent blockchains really are, there's growing pushback against constant on chain surveillance. Wallet clustering, transaction tracing, and compliance flags are becoming the norm, not the exception. And that's exactly the environment where privacy focused coins tend to re enter the conversation. Dash sits in an interesting spot here. It's not trying to be fully anonymous by default, but it gives users the option to prioritize privacy when they want it, and that flexibility matters. Optional privacy is often easier to integrate, easier to list, and easier for exchanges to support compared to always on privacy chains. You can already see early signs of this shift. Dash liquidity has been improving across multiple venues, including platforms like Weex, where traders are starting to rotate back into older, fundamentally solid assets instead of just chasing short-term hype. This doesn't mean the privacy narrative explodes overnight, but it does mean Dash is positioned for a scenario where the market starts valuing financial optionality again. Speed when you want it, privacy when you need it, and a network that's been battle-tested through multiple cycles. And when narratives rotate back in crypto, they tend to rotate fast. Now let's talk upside. Full bull cycle upside, not conservative short-term projections. Dash's previous all-time high was well above $1,000, peaking around the $1,500 to $1,600 range during the last major speculative cycle. That's important context. In a standard bull continuation, where Dash simply reclaims a fraction of its former valuation as capital rotates into privacy assets, prices in the $300 to $500 range are entirely plausible and would still be well below historical highs. In a full euphoric scenario, Bitcoin pushing new highs, privacy narratives accelerating, and Dash reclaiming relevance as usable digital cash, a return to four figures is not unrealistic. Today's circulating supply is tighter, and the infrastructure is far more mature than it was last cycle. That said, this is the aggressive case. It depends on market conditions, regulatory tolerance, and sustained momentum. Think in ranges, not promises. Wrapping this up, Dash isn't just a nostalgia play, it's addressing real problems in crypto with fast private payments and decentralized governance, at a time when those features are becoming relevant again. If you're bullish on a future where financial privacy still matters, Dash is a project worth watching. Just stay disciplined, respect the risks, and don't let hype do your thinking for you. What's your take? Continuation or waiting for a pullback? Drop a comment, hit like if this helped, subscribe, and check the link below for bonuses on Weex. Stay tuned for more crypto breakdowns. Catch you in the next one.